they said it was an error. I mean, I don't know if I believe it or not. I guess it could be. It certainly looked as though that was happening. The open interest was massive, which looked as though they were standing for delivery at the last day. But regardless of that, what we are seeing is since November, the United States has become a net importer of gold. North of 60 million ounces that we know of have been delivered into the COMEX. Gold is the only other tier one reserve asset in the world, according to central banks, and that was reclassified by the Bank of International Settlements. It's U.S. treasuries, and that's where it's been since the end of World War II. And since 2019, now gold. Now, let's just sidestep the fact that that could have been an error. Maybe it was, maybe it wasn't. We've seen tremendous deliveries into COMEX, more so than we've ever seen. And we've seen most of it coming from the LBMA in London, where they are a T+1 settlement exchange, where if you stand for delivery on your trade, it's T+1 as a settlement. On the third day, the metal should be moving. So much has come out of the LBMA. I think they've spooked the LBMA because of their rehypothecated position. I'll explain that in a moment. They've now all of a sudden gone to T+8 weeks. And they say it's a shortage of trucks and manpower. So the Bank of England evidently is short on trucks and can't make the delivery demands that are set upon them. To give you an idea, they have somewhere in the neighborhood of a float of 36 million ounces of gold, but yet that's standing behind somewhere in the neighborhood of 280 or 300 million ounces in open spot contracts. In other words, if every one of those contracts stood for delivery, over 300 million ounces roughly, there's only 36 million ounces for delivery. That's a problem. And on silver, the LBMA has approximately 260 million ounces in that neighborhood of silver that is unencumbered, right? They have 780, 760 total on the LBMA in their vaults, of which over 500 belongs to the ETF. So about 260 million ounces are supposedly available in London, but they trade 2.9 billion ounces per day, 3.5 times annual global mine supply. Again, if everyone stands for delivery, we got a big problem. And so all of a sudden they've gone from T+1 to T+8 weeks, which is a big issue because they say it's just a shortage of trucks. Imagine you have a multinational jewelry business and you own these contracts so that you can fabricate your jewelry. Sorry, guys, we apologize. I know you're expecting your metal, but it's 8 weeks because we don't have enough trucks. This is almost the form of a default. Most of that metal is coming into the United States. As I've mentioned, we've become a net importer of the only other tier one reserve asset next to U.S. treasuries, which the world seems to be shedding. The central banks are selling treasuries and buying gold, which has doubled the performance of the 10-year treasury since the turn of the century, doubled it with no counterparty risk. In other words, it can't be sanctioned, can't be taken from you. And what I find really interesting above all else is the tweet that Trump came out with on April 20th, 2 days ago, at 3:09 p.m. on Truth Social. He says, "The golden rule of negotiating and success, he who has the gold makes the rules. Thank you." Interesting. U.S. has become a net importer. J.P. Morgan delivered $4 billion of gold the end of February into COMEX for a customer. Who's that customer? Could it be the Treasury? Could it be the Fed? Could it be Warren Buffett? We saw the largest deliveries into the COMEX in its history over the last several months. And so as gold is coming in, which is the only other tier one reserve asset, you have all sorts of noise around the periphery, whether it be gold is held on every central bank balance sheet, including the United States, in something called the gold revaluation account. You can't make that up. When Nixon closed the gold window in 71, he revalued gold. It was at $35. He revalued gold the next year, 72 to $38, which means he devalued the dollar. And then the following year, 73, revalued it to 42.22, where it stayed on the balance sheet ever since. In 33, over my shoulder, when Roosevelt confiscated gold, it was at $20 an ounce. He paid everyone $20.67. Well, if eggs are a nickel for a dozen back then, 67 cents is good. And then he devalued the dollar immediately by 40%, in essence, revaluing gold at 35 an ounce, where it stayed until Nixon closed the gold window in 71. So we see all sorts of talk, whether it be the head of the German Bundesbank and several of their board members, the head of the Dutch National Bank, both screaming, we need to revalue the gold, which in Europe, it's at 35 an ounce still since the end of World War II. It's still there. We need to revalue gold and value it at least market to offset the liabilities on our balance sheet. And then you have Senator Loomis from Wyoming here talking about the exact same thing. Hers was in reference to funding a Bitcoin strategic account. Let's sell or revalue the gold, rather, that supposedly is being held by the Fed at Fort Knox, at the Federal Reserve Bank of New York, at the West Point Mint, and at the Mint in Denver. So when they talk about auditing Fort Knox, there's more than just Fort Knox. There's all those other places. But let's revalue it and use some of the proceeds to buy Bitcoin. So there are people even talking like James Rickards and using a 40% gold backing and dividing that number of ounces that we supposedly hold, over 8,300 metric tons, into the money supply, or 40% of it. And the number he comes up with is $24,000. The mechanics behind that are kind of weird. The Treasury would issue what's called gold certificates to the Fed, which is collateral in essence. The Fed would print money and give to the Treasury. I'll explain that in a moment. But they don't get right to the gold. It's an accounting gimmick. They get right to the cash value of the gold. The Fed does. So it still belongs to the Treasury and to the American people. But every $4,000 increase in the price of gold, the Fed would, in essence, give the Treasury, based upon the number of ounces, $1 trillion free and clear to use however they want. At $24,000 an ounce gold, the Federal Reserve would, in essence, give the Treasury $6 trillion, what they could use to pay down debt or back what Judy Shelton says. I interviewed Judy. Judy is a brilliant woman. She was Trump's nominee to run the Fed in 2016, and many think she'll run it here when Powell retires or when his tenure is up. She's advocating for issuing gold-backed treasuries, 50-year to start with and shorter duration after, redeemable at the end, with stable coins issued off of it. But she told me flat out on my interview with her, which people can go and listen to on our Miles Franklin YouTube channel, that Trump will issue gold-backed treasuries on July 4th, 2026, that they've talked about it. That's the 250th year anniversary of the country. In a world where no one wants our treasuries anymore because of inflation, weaponization, volatility, etc., this would inspire confidence. Now, if that is the truth, if you really are going to issue gold-backed treasuries, now let's take a step back. Well, the first thing you would need to do would be to reshore all the gold that has been lent all around the world. So you start delivering it all under the guise of tariffs. And then at some point, the Bank of England says, holy shit, this is not just tariffs. They're draining us and we're in big trouble because we are way over leveraged. We have way more paper than we do bars, and no one's ever stood for delivery, but look what they're doing to us. All that metal's coming back and we're in trouble. So wait, we don't have enough trucks. Tell them it's an 8-week delay. Maybe we can get our house in order by then. Don't know. Gold is the only other tier 1 reserve asset next to what? U.S. treasuries, which everyone is selling. So how do you inspire confidence? Well, you issue treasuries backed by gold. Give it another year and 3 months before you issue them. Keep letting gold rise little by little by little, which isn't getting noticed by anybody except guys like you and me. And then maybe we'll revalue it market to market at some point or even higher and peg it to a new system where treasuries are redeemable in gold. Now, there's a lot of fact in what I just said, a little bit of supposition, but what I will tell you is that the deliveries into COMEX are real. Whatever they want to tell us about that being a glitch or an error, maybe true, maybe not. Maybe they just panicked and told everyone, we got to cash settle you for now. This is a problem. I don't know what they did. And maybe it really was a glitch. But the fact that the United States, at first time in my career, has become a net importer of gold, the only other tier 1 asset in the world, all this gold is flowing in, and you have all of these entities at high levels talking about revaluation, pegging it to a treasury system, redeeming it that way. All of these things are coming together at the same time. And here we have gold at almost $3,500 an ounce, and there's not a damn person in the mainstream who's talking about it. Gold is not reacting to something. It is being quietly reintegrated into the fabric of the new monetary system. That's my belief, and that's why it hasn't caught the attention of the mainstream yet, which if you would have told me at any point in my career gold will be 3,500 an ounce and no one will be talking about it, I'd say you're out of your damn mind. But for all of those of you out there that are wondering about timing, the fact that the retail public is completely asleep at the switch on this, and the only people really accumulating it are the sovereign wealth funds and the central banks, the commercial banks, and some very sophisticated in-the-know people, should tell you we got a long way to go on this one, a long way. And to me, it's just the very beginning of what should be a hell of a run on gold. Everything that happens at that level on the COMEX and the CME group, which is completely and totally full of shit, to me, rings of conspiracy, fraud, not being true. They have allowed the markets to be rigged by the commercial banks for a very long time. And the suppression that is very prevalent in the COMEX and has been for a very long time, where a handful of Western banks can, in essence, control the price of gold and silver with naked shorting, which means you're shorting without the metal behind you, creating more and more and more and more shares that are what's called rehypothecated off the same ounce of gold. In other words, if everyone stood for delivery, it's exactly what the Hunt brothers noticed in 1980, way more paper than there are bars. And if everyone stood for delivery, well, Houston, we got a very, very big problem. And that's the point. It's that everything that they've allowed to happen is horrible when you talk about the investors and the miners and all the people who have invested in the precious metals industry. They have allowed a handful of Western banks, in essence, to control the price. And that's changing. It's changing right in front of us because, in fact, they've lost control of gold because the contracts all have delivery options. You can stand for delivery. During my entire career, no one stood for delivery, less than 1%.